Would you like to own a piece of SpaceX, Anthropic, and OpenAI? If the answer is yes, well, you're in luck because actually all three companies plan to go public later this year, which means investors will have chance to basically buy a bit of those companies. And it's creating a huge frenzy on Wall Street, in large part just because of the sheer scale and unprecedented scale of the size of these three IPOs. Each company is targeting valuations of in excess of 1 trillion US dollars. So huge, huge companies, mega cap companies. To unpick all this, I'm delighted to be joined by portfolio manager Sahil Shaikh to talk about the trio of IPOs. We'll talk about who's buying them and whether this is a moment of opportunity or a signal to be cautious. So, let's start with the basics before we properly get into it. What is an IPO? And what's all the excitement about?
Sure. I mean, an IPO is initial public offering. So it's basically when a private company lists on a stock market for the first time. And what that allows is investors such as, public investors such as myself and yourself to buy shares and provide capital to the business. And to your point of why the buzz, it's ultimately the companies included: OpenAI, Anthropic, SpaceX, AI. And when you think about how AI and tech have been the major drivers of equity markets in recent years, it's no surprise there's a huge amount of investor appetite for these IPOs. OpenAI and Anthropic are at the cutting edge of AI, behind ChatGPT and Claude, as a reminder. And then SpaceX, has Grok AI, but it's also aerospace, a satellite company. It has ambitions of spanning like space-based data centers to colonization of Mars. So all three are commanding huge valuations, and they're really riding the strong market enthusiasm for tech and AI.
Okay, so another way to think of it is like these are like the catnip for the markets at the moment, where there's such huge interest in AI. So the key question is, why now? Why are they going public rather than remaining privately owned? And they're all sort of IPOing at a similar time. So is there something that connects these three companies together?
Yeah, I think in my mind, it ultimately comes down to three things. First and foremost, a vast need for cash. Computing power, or Silicon Valley calls it compute, is what is needed to make AI work. It's very capital intensive. They need power, they need data centers, they need chips, and this all goes into training AI models. And it's a huge infrastructure spend, and going to public market just broadens the amount of investors that you can raise cash from. They've used other routes. Secondly, they've used other routes to raise money quite extensively, such as debt markets and private equity. I think OpenAI has raised 122 billion just this year, earlier this year. And thirdly, I think this is quite interesting. Nobody wants to be last. When you come to a market, you don't want investors to feel like they've had their fill of the AI themes. So it's no coincidence that once one has broken cover, we then hear about the others accelerating their plans as well.
Okay, so the worry that there isn't a limitless appetite for AI and they want to planting their flag in the sand and not be the last. That makes total sense. So three huge listings, who's actually going to be buying them?
Yeah, I think initially major institutional funds and retail investors will be buying them. They'll ultimately, some analysts are saying that they'll be rotating out of assets like Bitcoin and potentially other Mag 7 companies. What's really interesting is when you think about AI, public investors had predominantly exposure to the hardware side, the chips, the data centers. With OpenAI and Anthropic, you get a lot more exposure to the software side of AI. Previously, you had a bit of OpenAI exposure through Microsoft, and then Google, obviously, through the Gemini. But adding OpenAI and Anthropic really gets you into the software side of AI as well. And secondly, what's really interesting is that you've had a lot of index inclusion changes to accommodate these IPOs. So that's where Nasdaq and to a lesser degree S&P have almost fast-tracked the rules that can bring new stocks straight into their major indices. And what does that ultimately mean? Whether you like it or not, if you're a passive investor, you'll automatically be getting access to these to these major IPOs. And I think lastly, there's a lot of the active management community, which is benchmark against the S&P or the Nasdaq, and they will almost be forced buyers just to buy it as a benchmark weight, not necessarily have high conviction and overweight it, but to buy that benchmark weight so it's in their portfolio, so they're not betting against their benchmark.
So I'm going to put my skeptical hat on now. There you go, put it on. Given the size of the valuations of these companies, each one potentially looking at over $1 trillion US, and the fact that Nasdaq and S&P are looking at ways to sort of fast track for IPOs, including these, you'd think, well, these are surely really profitable companies. Then that's surely part of the interest, but that's not the case, is it?
Yeah, I think you're right. Despite their tremendous revenue growth in even OpenAI and Anthropic, these are companies that's earning tens of billions. They're still loss making. So it just shows you the sheer amount of capital expenditure required to train AI models. Now, if we look at SpaceX, for example, it has many different business lines, one of which is, I think, Starlink, which is the only one that's profitable. But it has a valuation of 1.75 trillion, according to some banks, and it could be trading in and around 91 times revenue. Now, let's compare that versus Nvidia, the poster child of AI. That trades around 21 times trailing sales and is highly profitable. So if you're an investor like for SpaceX and possibly Anthropic and OpenAI, you really need to buy into the vision as well as the numbers. Is this current capital expenditure justified for future revenues? And then staying on SpaceX, it's probably no surprise that its prospectus, is really, driving into the euphoria around, rockets, satellites, planets to build, excitement in and around that. There's a very strong narrative of cutting edge future technology.
As a Trekkie, I would be a sucker for that prospectus with all the pictures of rockets and planets. But the final question is whether this is a really, really big opportunity in the market or a signal for concern. And I can understand this. If you think about, a lot of investors will be thinking, well, look at the valuations, they're astronomical, pun intended. And there's a flurry of IPOs. It starts to make you feel like you're in the late 90s, and it feels a bit like the dot-com bubble. Do you think they're justified?
I think it's reasonable to be cautious. I mean, bubbles start with a good idea and they end when expectations run far too ahead of reality. I mean, that could be the case here, given how relatively high valuations are and the amount of hype. But on the flip side, we're in a real, genuine structural shift. AI is a real economy-wide productivity driver. You're seeing massive amounts of adoption. Yes, OpenAI and Anthropic have spent huge amounts on capital expenditure, but they've been around 2-3 years and they're already earning tens of billions. This is unlike the dot-com bubble where there were effectively no revenues. The revenues are there, but the capital expenditure is incredibly high. I think what we're focusing a bit more on is there will ultimately be winners and losers in any sector. So it doesn't make a lot of sense to bet against AI as a theme, but within that sector, I always use the example of the 2000s. You had Ask Jeeves, Yahoo, and Google. Google was the ultimate winner, and I think within AI models and software, you'll see a consolidation, not just one winner, but maybe fewer winners or fewer AI models than there are now.
That's really interesting. I wish we had more time to talk about this for a bit longer, but we don't. That's it. But I mean, whether you're on the side of really excited about these IPOs or you're more skeptical, I think there's one thing we can all agree on, which is they are really interesting companies. Like what they do is interesting, and ChatGPT and Claude are now household names, tools that people weren't using a few years ago, but now people are using extensively in their daily lives. And who isn't interested in rockets and things? Well, I am at least. So Sahil, thanks so much for your time today. And of course, thank you everyone for watching. And we'll be back again next week with another topic that's caught our eye.